X DAO podcast.
Thanks for tuning in to the Deus X DAO podcast, a place where some of the most progressive and innovative builders, thought leaders, and traders in the crypto space come together to discuss all areas of the crypto industry. Whether you're into DeFi, Layer 1s, Layer 2s, NFTs, or anything in between, we've got you covered. And as a reminder, nothing said on this podcast should be construed as financial advice or as a solicitation to buy or sell any digital asset or security. The comments, views, and opinions expressed by the hosts or guests on the podcast are their own. As always, you'll need to do your own research. Now, with that out of the way, let's get to the episode.
Hey everybody, welcome to this Traders Roundtable from Deus X DAO. We do these trader roundtables to give you a high time frame overview of the markets and also to get traders together and share their ideas. We always think that sharing ideas about trading or the cryptocurrency market is pure alpha and helps everybody. So that's why also we do this in public and host this on YouTube and our Spotify eventually. But if you're listening through Spotify, please check out the YouTube version because we will be sharing screens. And in this Traders Roundtable, we are joined by Syra from the Deus X DAO and Libs, who I know from the Burp Nest. Hey everybody.
What's up, guys? Happy to be here. Very happy to be here. Hope you guys are doing good. It's gonna be an exciting one.
Yep. A lot to cover. Exciting times. Obviously, it's always exciting times, but now in particular, we're sort of like in the precipice, I guess, of whether or not we're going to see a big bounce or if we're going to see lower. So really looking forward to going into this with you guys.
Okay, that's great. And I think we should start with by taking a look at the SPX or the ES, because crypto has been trading very correlated with traditional markets lately, and of course the looming recession is definitely a big part of why crypto is going down as a risk asset. So, do you want to kick it off, Syra, maybe with your analysis that you did on the ES Mini, I think?
Sure. So, sorry, let me just sort of clear out my charts here, and I want to show you. Ape is familiar with this high time frame channel, right? So I brought this channel up to you guys probably here, I think maybe here in April. And we're still in it, or rather, we poked our head. This was a nice deviation away from the channel, and then bounce, rejection. Now we're back inside, right? And I think what I noticed is, or I think we can all agree that the S&P 500 likes staying in these channels, right? So we had this nice one here, broke. 2008 was the same, broke, and now we're in this. I mean, look, we were talking about this earlier before we started. Nothing about this screams bullish, right? We took out these set of highs for like a swing failure pattern almost. And really, I mean, you would expect now, if we really have been accepted back inside this channel, you would expect, for us to make our way back down to the bottom of this channel. I mean, that's what I would think. And then you ask yourself, well, what's the time frame here? And you guys know, Ape knows I like using, I'm a Fibonacci trader. So if we pull up a Fibonacci time to measure, okay, how long can this downward move last? So if you take, the beginning of the recent uptrend to the top of that same uptrend, you get your Fibonacci numbers for your 0.618, your 1, 16182, and generally the downwards move will be at least a 1-to-1 of the upwards move, at least. Generally you're looking at more than 1-to-1, and so your 1-to-1 would be October 12th. Your 2-to-1 would be in December. So yeah, I mean, we have all the way up until December really to see this play out to the downside before maybe your next bounce. That is generally what I'm looking at. I don't think anyone can say that, oh, this is a buying opportunity, we should definitely jump in. Of course, we can go up, anything can happen, but just from probabilistically, I don't think that's the most probable scenario. And also, can I just say that a lot of my analysis, if you guys like what I look at and how this, how I trade, I guess, all of it I've learned from Chart Champions. I have to say it. I don't want to take credit for all these ideas because they did teach me how to do this analysis, as well as, they do a Sunday weekly analysis, Daniel, their main guy. And so some of the ideas you're going to see, maybe a lot of it will be really from him. But yeah, this is my analysis for the S&P 500. Do you guys have any sort of questions or anything like this?
Yeah, is it like if the price would reach the bottom of the channel where you would go long, or do you have like more expectations about where this will bottom eventually? Because we're looking at like quite a bearish scenario for these markets. The Fed is trying to fight in inflation. It's more like of a stagflation environment we're in, but what does that mean for your chart longer term?
Well, I would say that you trade the trend until it breaks, right? That's generally it. I'm looking at, if you take this volume pool and sort of, I think it's maybe from here. Yeah, I mean, look, if we get accepted back into this value area range, right? So this is the value area high, low, and the point of control. If we get back acceptance into this, then you would expect us to sort of drop into this point of control. And that's an S&P 500 at 2.7. That's a 2,007. What is that? That's another 50. That's a 50% drop almost. No, less, but that's a big drop, right? 33% drop.
That's huge. That's huge. That's scary. That's gonna mean, yeah.
But I'm not saying it's going to happen, but it could. It really could, especially if this pulls out onto like 2024. Like, we've been going up for so long, and this was, one would say, the parabolic part of this greater uptrend, and so a correction is, and a lot of people have been waiting for this correction for a long time. I have been saying the correction's coming, has been coming, but now that you have all these macro factors now sort of lining up, you have to think, well, how low can we actually go? And anything can happen, right?
Yeah, and I think the first moves down happened. Like we saw basically a short covering rally or a short squeeze rally in the last few weeks, where basically the S&P outperformed Bitcoin, which was interesting to see. But it doesn't mean that it's a full reversal in the downtrend. And like it always mean reverts. It might take out some levels like that people are watching, like, oh, wait a second, we suddenly have a higher high than before. But when momentum is still down and you are basically in a economic environment where there is not much support here to push price up, there is no money printing, war, energy is actually quite expensive, so that will make production more expensive and probably less will be produced. when you have a clear environment where it, like the dust needs to settle. There is a lot of uncertain factors going on. So I wouldn't. I would just wait for that real trend flip, and I think this was just mainly a short squeeze rally. But Libs, I know you are also watching these charts. Do you have any charts for the S&P, or are you
Oh yeah,
mostly
absolutely.
watching Forex?
Yeah. If you pull up my chart, we'll talk about the S&P 500. I have a few interesting levels here that I want to show, and some that actually aligns with Syra's analysis as well. And I really do like the way you've used the fibs here, and I do feel like I really need to learn the time aspect of the Fibonacci tool to really try to, because that's one of the things that I feel I'm lacking in, not lacking, but it's like the last part of my trading strategy is to get that timing aspect in. I really do like that the way that you've used the fib right there. Let me just show you this shot right here, and I want to focus on first this move right here. Right, so this was the rally that we experienced, now recently, and it felt like this rally right here had the potential to put us in a bull market, right? It really had the potential to break the trend, and the trend that I'm talking about is basically this one right here. So we focused on this one, and I remember when we broke this resistance area, I became quite bullish, right? But I completely ignore the idea that you have the short LC, the reload zone right here, the area between the 0.618 and the 0.786, where prices almost always reverses, right? And not only did we have the short LC, but we also had the 200 simple moving average here on the daily coming in perfectly at that trend line. So it's like I'm seeing this and I'm like, wait a minute, this is obviously still a downtrend, right? And it's one of the most perfect rejections we're getting right here. So if this move had the potential to break the bearish market structure, but for that to happen, we had to bounce here, which we actually did to start off with. But then, of course, we had the Powell speech in Jackson Hole. Basically, he came out and he said, "We're not going to stop quantitative tightening until the job is done." Right? Very clear, very simple, short and sweet, and the market panicked, right? So that broke down, and in my opinion, that was it, right? That the bounce that we didn't get here was what kind of the last nail in the coffin of that potential bull market, right? So for me right now, every little hope of a long setup I have had here is just gone. So right now I'm looking at only shorts, right? And I think it's very, very important to actually keep track on the S&P 500 because, Bitcoin is a risk asset. The S&P 500 is a risk asset. But when we are in a market condition that we are right now, when risk is just so obvious, right? When you have risk on sentiment, it's just very, very obvious. Everything moves together. So getting an idea of where the S&P 500 might move is very, very important for any trader, I believe, because we're trading based on that. Of course, in the forex market, it's going to be a bit different, but we're trading based on risk on and risk off sentiment. And right now, the S&P 500 is back in the bearish territory. There's nothing bullish about this chart. And I think we're definitely going lower. So the first area where I do expect a bounce, a medium-term bounce, is going to be around this level right here, somewhere between the 0.618 and the 50% fib, where we also have a quite decent support area, right? But ultimately, I do believe that with the current macroeconomics that we're seeing, housing market is kind of slowing down. I've actually read that the housing market is slowing down faster than it did in 2007, which is quite astonishing. So we might actually be going into a obvious recession right here. When that happens, the S&P 500 is going to move down, 100%. And well, not 100%, it's not 100%, but you know what I'm saying. It's quite high probability. And the first major support area that I'm looking at is going to be the reload zone measured from the low of the COVID crash to the top of this move right here. But when I watched Syra make, do his analysis, I zoomed out and I thought, why not look at the 50% level of the whole move, like the whole bull market from the beginning of, I think, around 2008, which actually gives us the same levels, right? So we're looking at this right here. We're adding the 50. Well, actually, it's going to be the midpoint of the reload zone. It's very interesting. 50% drop. It's right down here. It's right in the mid zone. It's incredible to see this because I mean, come on, I don't think the S&P is going to be dropping 50%. Imagine the strength of that recession if this happens. And looking at the current economics right now, there's a real possibility that we are entering a recession. I mean, in Europe, it's pretty much already happening. With the energy crisis, we've got the war in Europe. It's coming. The euro is looking extremely weak. The GDP is looking extremely weak. I think one of the reasons why the dollar is not showing that type of weakness is because it's not connected to the energy crisis in the same way. It's not getting affected by the war in Europe in the same way. And the weakening of the Chinese economy and the supply chain issues, it's affecting the European markets much harder than it's affecting the American markets. So maybe it's lagging a little bit, right? And as soon as that housing market shows more obvious signs of a drop, you will see that unemployment numbers going up. And that is when I believe that's when we're going to see that momentum coming into the downside even quicker. So what does this mean for Bitcoin? I mean, we haven't gone into Bitcoin yet, but obviously I do believe that some of the reasons why we're watching the S&P is because we want to get an idea of what other markets are going to do. Because I'm not actively trading the S&P 500, but I'm looking at this on a daily basis to get an idea of where the other markets might go. And I don't know about you guys, what you think about this, but yeah, when it comes to a possible bottom, I have a very hard time seeing the S&P 500 go down to like 1.8 or something like that. Like very, very hard seeing that happening. I do believe that it's more likely to bottom at around somewhere between around 3.5, something like that, just create a new low. But then again, if we enter recession, it's not going to be a 2-month long recession. It's going to be a long time, right?
Correct. I mean, so it's cool when you have different analyses that sort of point in the same direction, or we're all doing our own thing and coming to the same conclusion. I mean, I think 3.5 to 2.7 is like sort of my area. But I've heard traders, what's his name? Gareth Soloway, you guys know who that is? He was, he made a bold call and said that the highs are going to be in the S&P 500 for the next 5 to 10 years. Like, what does that mean? It means that we're either going to go really low or we're going to maintain this, like, probably a large sideways range for a long time, if he's correct. But yeah, I mean, I don't think I was trying to Google like the last time the S&P 500 fell 50% from the highs. I don't know that statistic. I know 30% ish is, oh shit, there it is. What is that?
So that's the financial crisis of 2007 and 8, and that's actually when it happened last time. So and it's just so interesting, the whole situation, that what we saw. Well, maybe we didn't see a lot of that because I don't think we were all trading back in 2007. I know I wasn't. So we had a 50 to 60% drop when we had the financial crisis in 2008. And the interesting thing here is when you have such a huge drop and you're looking at levels of retracement, especially when using the fib tool, that's the level you should be using. You should be using that low and that high. Why not use this low right here? Well, because that's, I believe, an anomaly. That's something extreme. That's a COVID, right? Wasn't that the COVID crisis? No, was this one?
It was.
Yeah,
No, you're correct. You're correct.
So you're looking at this and you're thinking, well, maybe that would be a new high and low, but I don't think so. Like you look at so you could, I believe, ignore this, right? Ignore this, and you look at the behavior of the trend, and what is that telling you? Well, it's completely normal to get significant drops in S&P 500 in a bull market, but when you get this, yeah, it's gone. It's no, that bull market is gone, and it would be just insane to see something like this, right? And it could be very possible that, I mean, it's not going to go straight down, one straight line down, but when you're looking at this from the higher time frame picture, like, doesn't this look, it kind of looks probable, right? If you look at from a cycle perspective, right? It's not possible, but I don't think it's going to happen. And I don't think it's going to happen because it seems so extreme. But honestly, do you think people that were trading this thought that the market was just going to die? You're up, you're trading up here, and people are doing the analysis and saying like, we're probably going to be bottoming here, and then boom, bottoms down here. So the unexpected will happen in markets. We really do not know anything about what will happen. And one thing we can be sure about is something will happen. We just don't know what. So it can be rather extreme, right?
Yep. So to your point, oh, sorry, go ahead, Abe.
Yeah, and I think this is why you should just look at the trend, because it might not get to that level eventually. I'm going to share my chart too, which is basically the same chart here, looking at that 2008 recession. But I plotted a 100 moving average weekly and a 20 EMA on there also weekly. And what you can see here, if we go to 2008, you'll never know where this ends up. You can draw supports, at all these levels, or I think a lot of people might have gotten wrecked when they drawn this Fibonacci and then try to buy somewhere here, which was fine entry if you had a really long, really long window. This was a little bit of a weird pattern here. But still, if you just look at that momentum, you can see that often the S&P respects the 20 EMA on the weekly, and you can have a fairly good idea of a trend with that. But especially like longer term trend, like the 100 moving average, shows us also something. And it's when these flip, when these get rejected or get respected, that a trend starts to happen. So here it was rejection and it started to go down, and here it was like acceptance above it and the trend was up. And there are like some fake outs, but in general you can get quite a good idea of what happens in the trend. And like during these years there were some moments that the S&P got below that 100 moving average, but always got above that, and there was like a move down, and then eventually it got above. No real rejections happening. It was almost like V-shaped reversals in both these cases. But what's interesting now is that it tried to get above both those moving averages, but it's actually now like failing to do so. So in these two candles from the last 2 weeks, and especially last week, we see that there is some initiative at those moving averages where the selling happens. So the question for me would be whether we see more initiative, more red candles here, and it continuing the downtrend, or just gets acceptance above that. And then, of course, we have some bull market again. And you could do the same on the daily, but the same is happening on the daily, where with the 100 moving average, that was actually respected a lot in the uptrend, and now it's basically with some fake outs above being rejected, and that's why you wouldn't want to see that initiative, because that would make these two time frames really line up with on the daily, on the weekly, and then we can scroll back to 2008. and you get actually quite similar patterns and similar movements. And I did find it really hard to pick like these price levels where I'm interested. I rather would see some momentum loss. So this is like fast momentum, and then it loses that momentum, and then some trend change to actually engage with that. And I think that's also what I want to see eventually on Bitcoin, which makes it also a little bit hard for Bitcoin to give some price targets for me where I would be interested. Like it could have some price levels where I would look for bounces, whether it's Fibonacci levels or support levels. But whether it's really like the bottom, I would never want to try to call that. I think.
Yeah.
Like what would you be looking for? Like what's your indication of trends you want to see reverse for?
So can I pull up? I was just sort of looking at. I just want to show two things. So first, to Libs's point earlier about the 0.5. So this was cool, right? So I pulled that fib right from the 2008 low to the high. So we're on the log scale, but the fib is on non-log, and you'll see that the 0.5 is at 2,700, which is where this fixed range, not that one, sorry. Oh yeah, it is that one, right? So the point of control of all of the volume, meaning the number that, or the price where the most amount of volume has transacted in this pulled range is on this red line, which is on the 0.5. And now this is the SPX on Owanda. Earlier we were looking at the ES, and I do most of my analysis on ES, but this one, it's good to use different charts to see, like, I guess the differences in volume. And if you pull that same fixed range pull, we're now back inside the value area, right? So we got a rejection there, deviation above it, now back acceptance inside it. So I would think that if we break this low, then we're obviously going to go lower. What will show me that we're going to have some strength above it? I mean, to the upside, well, we would have to, first of all, this is a 4-hour market structure change. It's a daily market structure change, probably. But we would have to sort of reverse that market structure, sort of do this, reclaim this, and then we can say we're going to go higher. If this doesn't happen, and this stays as that high, then you have to think that we're probably going to go lower.
Yeah, I mean, it's yeah. I think it's very when looking at the high time frames and looking at because basically what we're doing here is we're just looking at the trend, and we're just asking ourselves first of all, we're asking, where is the most probable area for a potential bottom, right? But then when that level gets hit, all you're really looking for is at least the way I'm trading, because I'm a trend following trader. So even if that level gets hit and it's a downtrend, I'm not going to go long because it's a downtrend. So we need to have that bullish break in market structure. And what you're saying right here is you need certain levels above to get reclaimed for that to be a bullish break in market structure. And looking at the chart right here, we have quite a big range to reclaim to really break market structure. And I think Aperture said something very important with the fact that he might not be that interested in looking at specific prices and specific levels for a bottom. He's looking at a slowing down of momentum, and then perhaps seeing a range and a break above that range and reclaiming those significant EMAs. And I think that's the mindset and the approach that you really need to have when looking at this. So when you're in a downtrend, you have a recession looming, you need to be in cash. You can't just start buying every dip, because you need to understand what dip is worth buying. And when you're in a downtrend, in a recession, that's not the dips you should be buying. Maybe in a long-term dollar cost average strategy, but this is different. This is way different. So I think what we have to do is look at a couple of levels of interest, and when those levels get hit, we need confirmation. And for me, confirmation would be like a a daily high, something like that, right? Just whatever, double bottom, something like that, right? And it's like it's going to take a while. It's going to take a long time, I believe, for this to happen.
Yep, I agree. It was. I wanted to say something earlier. What I wanted to say earlier is that for the past, decade or so, maybe even probably longer, is that people have been spoiled with a buy the dip market, right? Um, I don't think, especially people our age, we've never seen, like a such a deep recession that lasts for such a long time. At least 2008. I mean, I was still in high school, right? So that wasn't not paying attention to that. So any new investors who's been used to the past, 12 years of easily buying the dip might be, if might be in for a shock, right? If things just continuously go down for the next few years. So I don't know, having an approach where you're not putting, a lump sum all at once, would be good, to not do that. Especially if you're trying to buy Bitcoin, man. Like, especially if you're trying to buy Bitcoin. Do you guys want to make that segue to
yeah? Let's take a look at Bitcoin. If that's like the higher beta normally, like it wasn't. But yeah, you can kick it off with this Bitcoin chart.
So I told you guys earlier, I entered a long last night. And that was because, by the way, my entire portfolio is hedged. It's been hedged. And I entered a short last week, right? So, and now I have a long position that I entered yesterday. And that's because this range that we've been in now, since June, we've now hit the low of that range. So probabilistically, you would think that, well, maybe we'll get a bounce there. There were some other levels as well that made this interesting to me. But I'm not saying that I'm buying this because I'm expecting, a move to all-time high. Definitely not, right? I'm a day trader and I try to book my profits, where I can. And so I have my long. I am expecting lower because of what we just pointed out in the S&P 500. And yeah, I mean, for the most part, we've just been every single consolidation really since the high. We've been breaking down, right? Consolidate down. Why would this be any different, really? And so where can we go from there? I don't know. I mean, we all like 10K. All of us really like 10K. But just to point out, we are in a pretty good resistance zone. So if I pull up the Bitstamp, just because I have more information here, more time data, I guess. All right. So we have these nice trend lines, right? All the way from 2015 to now, and we are right on it. And this has basically been the trend line that's held us up in this massive bull market from the beginning. I would say that if this is broken and we start closing, if we start having candle closes below, under that trend line, yeah, it's just not good. That's not in the short term, right? Well, I mean, this is why if we do this and then bounce, there's still the possibility of us going down here or lower, right? Why not? It can happen. It really, what I would, being that we're all Bitcoin bulls, right? For life, really, you would think that this might, it could just be a healthy breather, given that we've been going up for the past 10 years. Now that breather could take a couple years, yeah, but eventually we all believe that this is going to go higher than the previous all-time highs. But Shit, I hate this. But yeah, I do think 10K is a big level, right? We have this is a monthly support resistance. Really, right here, and then we got the bounce from there that started our recent trend. And so, yeah, I would think that there's some kind of reaction here. It's also in line with the 618, right? And so you definitely want to see that. This is from this is a Fibonacci extension. Anyway, this area, I think, is a really nice area for a bounce. Now, is that bounce going to bring us to all-time high? I don't know. But, as a trader, I'm going to look for a long here. And, I'll bring it up to where it takes me. If it only takes us to 24K, well, that's fine. that's still over 100% gain. And I guess this is why it's important for us to maybe guide people who aren't really doing this full time. Because if this happens, people are going to be all bullish and start buying over here, not knowing that we're now just retesting this trend line, possibly for this. So, technical analysis works. It's important to know. It'll save you a lot of money if you can do it right, and it'll make you a lot of money if you can do it right.
You can also lose a bunch of money.
Yeah.
I think what worries me here is the fact that we're technically too close to I think we're technically close to bottom, and that worries me because I don't think we're close to bottom considering the macroeconomics. So I'm now looking at the S&P 500. I think we can definitely technically go much lower, and with Bitcoin, it's if the S&P 500 is going to drop 50%, I wouldn't really want to know how far down Bitcoin is going to drop. I don't think the S&P 500 is going to drop 50%, just to be clear about that. But there's a possibility, and if that happens, Bitcoin is definitely in danger, I believe. But I'm looking at similar levels as you are. I think the 10K region is just very obvious. I think that's the best possible support area for Bitcoin long term. And but we're close. We're quite close to that level. S&P 500 can drop quite a lot, while Bitcoin's still hitting that level. So it's a bit worrisome. I know that. All right, so it's my shot on. Yeah, okay. I know I talked about the reload zone measured from, or not the reload zone, but the whole fib measured from 0 to 69, or the top, right? And this is just, I believe this is just flawed way of doing things, because now when you look at the brand new coin liquid index, where you have all the price action, it's just a flawed way of doing so, because you need to look at the fib levels based on a log scale if you want to do it this long term, and obviously that's just not going to be possible. I mean, so what we have to do is I have to kind of switch up that analysis and use more local levels. And again, I'm going to look at the COVID crash as an extreme. So I'm just going to look at that low and that high. And obviously it's going to be not on log scale. Wait a minute. How's that even possible? Is it the wrong one? Fib. How is this possible? Did I invert this or something? Are you guys seeing this? Shouldn't it be the other way?
Maybe since your chart is on log scale, it does something weird.
Oh, right. You're right. So it should be this, right? Nah, that can't be it, can it? Weird.
Well, I think that's the correct one. I remember something that it is.
That's correct. This one's definitely correct, because I have that one.
Oh yeah, so you have to do this one. Obviously, you have to do, if you do this on log, right, and the chart on log, you get a really interesting fib level. So you get it right here, right? So the area between like 50% and the 618 right here is any area that I'm watching, right? And I just think it. I really like how this looks on the higher time frames when looking at the log scale, and you know, but it's too close. I mean, I do still believe that it's a bit too close. Because again, we go back to S&P 500. I mean, we have like even creating a new low, down to this area or whatever, is going to be quite a huge drop in risk assets. Because remember, the S&P 500 is going to, be a good indicator of the risk sentiment, right? And if the risk sentiment is so bad that the S&P 500 is going to drop significantly, I think Bitcoin is going to drop way lower than this level. So yeah, I mean, maybe all, maybe fill up this whole area right here. But then again, I mean, does it really matter? I mean, does it really matter? We see this level get hit, and we're going to look for some bullish break in market structure. That's it. I also don't like the fact that the 200 simple here on the move on the weekly got lost. We tried to reclaim it right here, and it failed. So yeah, there's like, a couple of months ago, I remember we talked about, not we, but I mean a lot of people talked about questioning the fact that, are we in a bull market or are we in a bear market? I think everyone agrees now that we are in a pretty obvious bear market. And with that said, I'm hoping that it's just not the beginning. But you look at the macroeconomics, it might actually be the beginning. So the low might be lower than we think at this point, I believe.
Yeah, could be. And it's crazy to think that Bitcoin has already dropped from like almost 70K to 20K. And like only now are people saying, oh, well, maybe we're going to be into a bear market. And then because people are saying this, you have to think, well, everyone's thinking this. Things are probably going to do the opposite, right? So as far as I'm... right?
It's like when a range get obvious, when you see a range and you're like, yeah, this is a range, that's when it's break, it's going to break at that point, right? And when the trend is like super clear, it's usually the end of the trend. So when everyone's like, yeah, we're now in a bull market, that's when I start thinking like, maybe this is when we're bottoming. But then like, yeah, macroeconomics is not telling us that this is the end of the bull market. I want to show you guys a short here that I'm looking on Bitcoin, because even though we're looking at a downtrend, and I do think Bitcoin is going to move higher short term and test I believe it's the same levels that you were looking at. So you can look at this shot right here, where I'm seeing a possible range for Bitcoin right here, and this level right here, the 21.8 is what I would say the range EQ, the middle of the range of this current range. Where it's also where I want to potentially go short, which is 20.8 is right here, which is in perfect complement with that the 0.618 and the moving averages that I'm watching. So basically, I'm trading one system and one setup, and this is the only one I'm trading, right? So what I'm waiting for is a 4-hour bearish engulfing candle here with a stochastic RSI bear cross, and that's it. That's it. And I'm going to take profit here. And the low of that trade is 18. So let's go back to this one right here. Where's 18? 18 is it's still going to be that low. It's still going to be the low of this range, right? So it's going to be basically a trade where you go go short on the retest of range EQ after seeing it breaking down to the range lows. So that trade would still be a range trade, even though it's of course a trend trade on the local trend on the 4-hour. But looking at this chart, I'm thinking, maybe I should keep part of that position open. I'm not going to do that because, you need to test those sort of things first before you go and try it in real trading. But it's like this chart right here and these levels below, it makes a compelling case for Bitcoin to drop much lower than I think a lot of people are prepared to do. I mean, I said that as soon as Bitcoin drops below 20K and the on-chain metrics that I believe Aperture is going to take a look at, when they drop the buy zone, when they go into the buy zone and Bitcoin drops below 20, I'm going to be buying Bitcoin and I'm going to start buying Ethereum as a dollar cost average strategy. Fortunately, I'm only like 5% into that long-term position, so we can drop quite significantly. But it's scary, really, when you look at the shorts at this point.
Mm-hmm. Mm-hmm.
Yeah, and I think we should like also give like some counter arguments to this. Like, when would you be willing to long? Because at some point, maybe crypto, it isn't fully correlated, of course, to global markets. And although I agree with just trading this trend, short it if you can, it's probably going lower than we now think. But we can't ignore that Bitcoin has been holding for now like a previous all-time high at these levels here, and that there are supports lower. Like I'm also looking at 16K and 12K, which is 12K would also be like 80% down. Like almost half, or 40% from here. Let me check. 40% from here. So that would be quite a lot, and we currently still see that Bitcoin is rejecting some moving averages. Momentum is still to the downside. So we want to see that momentum flip. Until then, you are mostly blind buying dips, and in my opinion, you can, if you have a really long-term view, mostly on majors in crypto. On alts, I dislike that absolutely. So probably would only work for Ethereum and Bitcoin. But I think there is still some blood left, especially Ethereum. I think a $400 level would make sense eventually, but I rather wait for that to hit and then a trend change instead of like blindly buying it. But
and just to, sorry,
yeah.
Abe, I just wanna hit that idea home. If you are someone who thinks Bitcoin is too expensive for me, let me try to gamble on some of these alts, like, you're probably going to get wrecked. If not, you're already wrecked, and you've hopefully learned from that lesson. Like, this is not a this is high risk. It's very, very high risk. But yeah, anyway,
Very good point. Very good point.
Yeah. I even like I shorted an altcoin. Like, I'm going to show that HNT, and like
Nice.
after it basically did an 80% or 9% move down, I was like, yeah, but it can go down even more, and like
Yeah.
a final target is 60% down, but still, yeah, like I took a little bit of profit here, moved some stops, but yeah, it went still 30% from there. Well, yeah, you can definitely bet on the wrong ones.
Man, I always thought, your pre-breakout trades or breakdown trades look so risky. Like, I don't get it. I don't get it, man. I was always super impressed with seeing that. I'm like, why why are you going short here? It's gonna go up, and then all of a sudden it just dumps. Yeah.
It's just a preference. Like, I dislike really trading the breakout, and I think if you're anticipating a breakout, why not trade in that direction? But I think it's higher probability for me because it trades with the trend, and I know some of these consolidation patterns. So same, I think, with Bitcoin. You could see it here already there, that it was just basically printing a bear flag and then rejecting a moving average and then a breakdown. So I think your highest probability bet would just short it somewhere here, which I didn't do on Bitcoin, but I shorted alts instead because that was just easier, and also easier to see sometimes, because I don't know, sometimes it's just easier to see on alts that it's breaking down before Bitcoin.
That's so true. I mean, I rarely trade Bitcoin. I usually look at a setup on Bitcoin, and when Bitcoin. So this short setup that I'm watching on Bitcoin, I'm thinking, if that short setup will activate, there's going to be a much more clearer setup on an altcoin with much better risk to reward. So I think it's just Bitcoin tells you when to trade altcoins is what I'm thinking, and that's kind of like the way I'm trading, because I would much rather short an altcoin if a Bitcoin setup is appearing, because it's usually better risk to reward, in my opinion.
Mhm.
Yeah,
I like that idea.
I agree, and that's also funny because through these altcoins, I often know what Bitcoin is doing, but I still don't trade Bitcoin. And sometimes I actually do, like, hey, wait a second, this is happening on altcoins, and then I see a good setup on Bitcoin, so I trade Bitcoin also sometimes based on what altcoins are doing.
And
Really?
so I only
Really?
trade Bitcoin. I don't know if I told you guys this, but I really only trade Bitcoin. I'm just comfortable doing it. I mean, and I'm not comfortable trading altcoins yet. But that's just me. That's just preference, I guess.
That's awesome though. You know, having one asset to trade or one pair to trade in crypto, like that's a luxury. You know, honestly, like if you're able
Yeah.
to day trade Bitcoin, that's, go for it, man. I hate having 200 altcoins to check on a weekly basis.
Yeah.
It's you know. So if you can stick with low amount of pairs, that's awesome. I wish I could be doing that, but my system is just not giving me enough setup.
Mm-hmm.
I think I still want to show for Bitcoin these longer term charts, which uses some on-chain data. So this is the MVRV score. Some might be familiar with that, and I think a lot of people are looking at this from a point of view where if this is quite high, the bull market is overextended, and if this is quite low, it might be a good moment to start accumulating. And there are a few of these indicators, and I'll go quickly through three of them. Well, Matt, let's stick with this one because they all show the same. Like normally you would just buy, and I still think that this might be a good level to start buying Bitcoin. But with the overhead from the traditional markets, I'm actually reluctant to do so. So I'm actively not doing that. But it shows us that we are at a dip in the market here in the green, that it might make sense and keep your eyes open. So regardless of what the macroeconomic conditions are, I think when you look at such a chart, you can't ignore that if it will stay somewhere in this zone or start to go sideways. And I think that's really important for Bitcoin, that it could still dip to like 16K or whatever, but as long as it goes sideways in some kind of bottoming range, that's when you really have to watch the market, and especially if it starts to flip some of these moving averages again and starts to show momentum. Because if that happens after that consolidation, and then we are basically being that breakout trader, we can have rallies. That's what, for example, happened in 2018, where Bitcoin went sideways after such an important dip. I'll show you that too in this chart. Like, this was the level, and it started consolidating. The MVRV was also quite low, actually much lower than now. So that's why I would say, okay, maybe it dips even further. But after, let's say, almost 4 months of consolidation here, it started breaking out, and it was still consolidating, but there was some kind of trend change, and it wasn't a full bull market. But in 2019, we basically had a rally from well, let's count from here to here, where Bitcoin went up like 250%. So it went up from like around 4,000 to like 13,000. So even though it wasn't the full bull market, it was actually quite a nice rally. And that's what you also have to be careful for. There can be even bigger rallies in a high time frame range, and you can play those. You can play with the momentum, but of course, it might not be a full blown bull market. it might be more of a
Mhm.
bull trend in that case. So, but still, these levels are interesting. These levels make sense to keep your eyes open for some kind of bottoming signal. But as we think we talked about this in the pre-discussion of this live stream, is that maybe um, crypto is actually too young for this. It didn't. It basically started in 2008 after the previous recession. We don't really know how it will act during this recession. So that's where we have to be careful with all these indicators that were created in the last few years. They might not have that factor included of the macroeconomic conditions. So I rather wait for like a trend flip than like buying blindly and relying on these indicators. That's waiting for the black swan eventually.
So I on that point about like accumulation, just to give you an idea of what I'm doing, and this is separate from my trades, right? So between like 27 and 17, I've now put in about 25 to 30% of, the dollar amount that I would like to allocate into Bitcoin. And I'll be happy if we go all the way up and don't go any lower. And I'm happy with that 25% going, or 25 to 30% going up higher. But I'm also ready with 70% of that remaining cash to buy in between under 17 and 10. I'll put in another 30% injection, and then the remaining under 10K. And I'm happy to do that, because I wouldn't be happy if all of that went to like down 90%, but that's because I'm a trader and I can hedge and I short. Like, I'm fine with that as long as I catch those moves. But two, you're not putting all of that money in at one level, right? So yeah, that just to let you guys know what I'm doing with in terms of spot buying.
Yeah, I think these make a lot of sense just looking at high time frame. I think like I even also bought like around these levels with some DCA, but eventually I unwinded them in this rally up a little bit too early. But once it mean reverts, you'll have to see if it's really a trend change or a move down. And I
That
rather
short
just
in particular. Sorry.
Sorry, the short.
I'm sorry, because you said that you didn't, or that you unwound a little too early. I was expecting. I think a lot of us were thinking we were going to go to 28, right? We hit 25. I think from there, and we were in this range for like a month or two. We all thought we were going to go to 28, 29, 30, but it didn't happen. And so that short, just before we dropped, was, I think, a very difficult short to take. Yeah, but that's anyway. Go on.
Yeah, and eventually, like at first, I thought like it makes sense, 28K. But if you eventually, I started doubting that a lot. So that's why I basically start selling all that spot again on
I
a
see.
move up, because what you see is that often in crypto we don't get like perfect retests of levels, similar to how this never retested. Well, no, not retested this level or this level. It just continued because crypto is a high momentum market when it starts to move. And you often see that it doesn't fully retest levels. This one actually was, but it can happen. It can overshoot or it never reaches that if momentum is high, and especially when this momentum is high and it doesn't retest that. That's actually important to note, because that shows that people are willing to sell before these important levels happen, and that should tell you something. Like they're really eager to get out, and that's I think an important sign, especially in these two down moves. And waiting for a trend flip, becomes easier and easier because all these moving averages start catching up. And at first, when I bought over here, well, maybe a little bit later, it was like 100 moving average was above like 32,000. That was like that would be nuts. But over time, it got up and never stayed at that 28 level. So it was actually quite a weak rally. We know that now. But it got up, and like the 100 moving average is basically now around 23.5 or 0.6, which makes it really interesting. So that's also when stuff starts consolidating and maybe gets above those moving averages. People are really afraid of missing that absolute bottom, but it makes it actually much easier. But of course, patience is hard to have in such a market where you really want to get an optimal entry.
Yeah.
Any other thoughts? Oh yeah, go ahead.
Yeah, I mean, you don't have to time the bottom. It's just, you don't need to time it, especially not when looking at the high time frames. Like, who cares about missing out on 10% of a 400% move? I mean, it's just nobody should be caring about that. And that's also why I think one of the best ways for new traders because there's a lot of people sitting on cash right now. Hopefully, you're not stopped out, but you're sitting in or liquidated. You're sitting on cash, and you're thinking, when should I get into the market? Because now it's the opportunity, right? And you just apply a dollar cost average strategy. And when I say dollar cost average, you're not supposed to buy 2 times. Like, you look at your your desired future portfolio, where, like, how much money would you like to have in Bitcoin when the bull market starts, and you start doing some calculations on how many buys you could be doing per month or per week or whatever to reach that target over the course of, let's say, 12 months. And it's quite simple. You just buy a small amount every week, not dependent on where the price of Bitcoin is. And that idea then gets invalidated if there's a daily bullish market structure. And when there's a daily bullish market structure, you can enter with the rest if you have anything left. And I think that's just the easiest way to catch the bottom, because eventually you're going to catch the bottom. And you said something about crypto not retesting the levels, and that's actually that's a huge problem for me when it comes to my trading system, because, like, I need to have that retest. So if I need price to retest those horizontal levels, and I've seen that it happens more often on altcoins than it does on Bitcoin. So if you look at like the major the major last bull market, there's not a lot of retests there. I do believe that we did retest like 16K, but other than that, there's not a lot of major retests. I mean, when we broke 12K, you would have been missed out on most of that run if you waited for a break and retest. So yeah, when the momentum kind of gets going in crypto, you want to be make sure to be in there, because it rarely retests important levels. And
yeah, and I think I have to correct like myself a little bit there. Like, there is often a retest, but the question is on what time frame. Sometimes the retest happens on 1 hour and it's not even visible on a daily chart. So that also says something about the momentum. But I also remember,
Sorry, can I show you a trend?
Oh.
I don't trade ETH, right? I don't really look at ETH, but I do want to show. This is a very nice retest. I was just looking at it.
If you put it like this, it looks like absolute shit.
Look at that!
Wow.
Look at that! And so yeah, now we got rejected.
Is that a head and
like
shoulders?
Said,
showing us a head and shoulders right now.
Right.
The number one meme.
So,
Yeah, thanks for notifying me.
sorry, Lib. I also
End
wanted to tell you
stream,
this
end
because
stream. Lip set head and shoulder on stream. No, go ahead, Syra.
yeah, no. So I wanted to. You said that the time aspect. The time aspect is something that you wanted to learn. So I only learned this fib time very recently, and it was together with harmonics. So I started reading. Anyway, I learned about harmonics, and they just work so perfectly with time. And this is when things are like next level shit, right?
Yeah.
So, Ape, you remember this. I told you guys that I'm looking at this ABCD harmonic on Ethereum with a target of 800, around this area where the D is, and that would be in line with this fib time. Oh, with this fib time pull. And look how exact, right? That 1-to-1 fib time happened on June 17 or landed on June 17. You got that Ethereum low 1 day later, right? Because this is a plus or minus 1 day. And your first target is the 382 of the CD leg, which is 19K. And guess what happened? That's exactly what happened. And it was just so crazy to see because, mind you, I had this fib time and the harmonic up, you know, May a month before, and just to watch price go right to it was the craziest thing to me.
Yo,
But yeah,
I'm getting goosebumps when I'm seeing shit like that, like harmonics and fib time. You dive deep into that, and it's like a whole nother world. And it's amazing the type of analysis you can make. I mean, I'm currently reading a book called Law of Vibration, where they kind of dive into the whole idea of W.D. Gann and his theories on vibrational energies in financial markets, and it's amazing, and they actually work. It's just you can almost predict the future with this stuff. It's just insane,
yep.
the level of detail. And yeah, it's I wish I had more time to study that. Hopefully sometime in the future I'm going to be like an awesome, trying to predict the future and all that fun stuff.
I'll send you the textbook. So I have like 3 or 4 of the same. The guy who founded Harmonics, he has these harmonic trading. I can send those textbooks over to you. It is a
Yeah,
little time consuming, but it's very interesting, man.
yeah, yeah. It's amazing, and it's like it's crazy how well it works. It's like you're looking at the Fibonacci retracement tool. I mean, it's the Fibonacci sequence. It's not like it's a thing made for markets. It's actually it's visible in all of all of nature. You can
All of
and
yeah.
it's fun. It's just fun that it's amazing that markets they are really a part of, and they really mirror human psychology. And yeah, it's just part of nature in a way. It's just amazing,
Yeah,
mind
and we
blowing.
don't have to know why it works or explain it, but like for me, all that matters is I make money off of it, right? I don't need to be, I
Yeah,
don't need to like
and if you can make
figure out
money
why
out
it
of
works.
weird, harmonics, it's just awesome. Like, so what do you do? I'm like, I'm just predicting price using, harmonics patterns and Fibonacci sequences. People are gonna be like, what? It's magic. It's magic. It really is.
Yeah. So right now, just locally, just before we wrap up, it looks like maybe we're gonna get a rejection here, and then down. But interesting times, right? So you were looking at 20.7, right? So
Yeah.
this is an area for me, 20, 29, 21. It looks like the ES is, like we said, right? Market open, maybe it'll go up a little bit and then down. But it does have a lot to recover, right? To get back up to a change of proper market structure. So yeah, this is it.
I agree. That was basically three traders discussing two charts in more than an hour. That's how effective we are. but but I think we showed quite a few different viewpoints on how you could analyze all these charts. I think just like last time, how we come to the same conclusions, and that we're like quite clear and cool-headed looking at this. So I'm already looking forward to the next one in a few months and see whether it did make sense what we said here, because it takes some time for these scenarios to play out. So thank you for joining this traders roundtable, Syra, Libs. It was a pleasure to see and hear your analysis.
Yep.
Thanks,
It was
guys.
great meeting you, man. This was awesome.
You too, man.
Awesome, and that
All right.
wraps up this live stream. Thank you all for watching, and see you the next time.